Good morning, everyone. My name is Victoria Balogun. I am pleased to welcome you all to the second edition of DataPro Media Training for Journalists. We appreciate your time, and because we know you're time-conscious professionals, would like to go into the training immediately. I'll be handing you over to the facilitator in person of Mr. Dele Adeoye, who is the Chief Rating Officer and Executive Director at DataPro. Kindly use the chat box for any question or comments you may have, and I'll be here to attend to them. Okay, we'll be starting now. Over to you, Mr. Dele.
Thank you, Victoria. And it's my pleasure to welcome every one of us, specifically to the second edition of our for the media, which is titled 2024 Media Training Program. It's my take that we are going to have very interesting time together. And I want to believe that given the conversation of today, we will be able to see the value in this few time that we are going to spend together. So our conversation today is credit rating and investigative journalism. I should be done in about an hour, as I would like to leave room for you to ask questions, as I always know that when you talk to people who ask questions for a living, you don't talk for too long so that they can do what they know best, and that is asking questions. So we will be able to provide response as much as possible. When the time for question comes, you can unmute your mic and ask question. And if you choose not to speak, you can also use the chat box icon for us to be able to go through your question and respond to them accordingly. We'll go through the introduction to our conversation. We look at the connection between credit rating and the current Nigeria economic outlook. We will consider what rating actually means. We will also look at the rationale for media involvements. We look at rating decisions that could possibly be taken by a credit rating agency and what role will media play in that regard. So look forward to discussing rating and media collaboration, and thereafter we will conclude. My name is Dele Adeoye. Role of Executive Director of Operations. So I will be the one taking you through this, and hopefully we can then have interactions afterwards. But let me let you into why we're here. Like I said at the beginning, this is the second edition. We had the first in the year 2023. And we hope to make this an annual event. So last Thursday of every month of March in any year is a date that has been chosen. So I will implore us to block these dates in our calendar so that when we come back to you, it will just serve as a kind of reminder. Why are we so interested in training media? One, it is part of our corporate social responsibility that we have assigned to ourselves to educate the public on the workings within the capital market circle. The Security and Exchange Commission has been at the forefront of getting the public to be educated by the workings within the capital market sector. And I doubt if aside stockbrokers, most people would not know other professionals within the capital market sector. And this is why, in order to deepen the market and address knowledge gap, SEC pushed for professionals themselves to speak about what they do so that the public can be educated. So one of the reasons why we decided to do this is our own way of keying into that vision. But aside that, it is also our way of ensuring that we are able to upskill the media practitioners in reporting credit rating news. Because the information we issue into the public domain speaks to the heart of investment making decisions. And it's to guide the public as to why certain decisions are taken when it comes to investment decisions. So we want to promote the value proposition of the credit rating industry. We want to also see collaboration and cooperation with the media in being able to ventilate some of the information we have concerning rated entities. We want to also, because credit rating is at the heart of credit, we also believe that our economy will grow better if medium, small enterprise can have access to credits. And the beginning of that is that they also know what to do to prepare themselves for assessing credits, of which credit rating is a vital component. We also want to educate Nigerians on alternative and viable funding channels that, aside the money markets, capital markets, can also be accessed, and that poverty can generally be reduced if we become industrialized as a country rather than import dependent. The sign of our long period of depending on importation is telling on the economy as we speak today. So we need to encourage entrepreneurship. We need to create employment opportunities. We need to also be able to instill credit culture in Nigeria so that we can accelerate our growth. We also want to be able to encourage investigative journalism, which is what we, enhance what we do back here as a rating agency. So this is what we seek to achieve, and that's stemming out from our footprints. DataPro, as a company, began operation in Nigeria in 1995, and we have our footprints in credit rating. We have our footprint in business information service. We provide background information to companies operating in Nigeria for their trading counterparts outside the country. We are also a compliance consulting outfit. We are into regulatory compliance. We also handle due diligence and background check. We're also a licensed data protection, privacy compliance organization. And in all of these environments, we hold ourselves very hard in pushing this line of business. So having said that, permit me to make a very reference to Nigeria economic outlook and see how it connects to what we are discussing today. It's like stating the obvious if I say the Nigeria economy is currently going through a readjustment. You know, a sharp departure from what we have witnessed in the past. The first is that at the wake of the current government, the removal of petrol subsidy and the introduction of the floating of Naira by the new administration appears to be the core of what snowball into what we are currently experiencing. So some kind of readjustment is taking place as we speak. The central bank has asked to grapple with managing the exchange rates in the face of leakages and extraneous factors. And what we mean by that is that we can see that the moment the unification of the exchange windows was done, it begins to have a telling effect across board. So, however, we begin to notice some level of, drop. If you have been paying attention since I think 2-3 days ago, inflation too has been on the high side. We are recording the highest in a long period, even though we are hopeful that this will moderate by the end of the year, given the current CBN monetary policy stance. It's our view that Naira is absolutely undervalued. And we also hope that this will reach a fair value within a calendar year if the present economic reforms are sustained and all leakages of corruption, round-tripping, and the likes are properly plugged. Because when you look at the value of Naira today, and you compare it to other parts of the world using purchasing power parity, you will clearly understand that Naira remains undervalued, and we hope that it finds its true value when other uneconomic factors are dealt with beyond the issue of having to, tinker with the supply side of the forex market. Now, we also expect that capital allocation from Nigeria economy will continue to impact foreign investment within the short to medium term. Already interest rate is going high, and we also expect that this will most likely, if we are able to handle our forex issue right, we attract foreign direct investment, especially from investors that are hunting for high interest rates. So CBN has also announced that all valid foreign exchange backlog have now been settled, although there are investigations going on regarding some not so valid in the light of the probe that has been launched into the claims. We believe that with sustained forex appreciation, inflation properly tamed, we hope that price instability will not for the year runs out. So we believe that with all of this, it should be a good news for active traders with sufficient liquidity to keep the average cost of fund down to the barest level. But like we all know, the economy is a jigsaw. As you tinker with one side of it, it gives you the other angles goes out of joints. And that is why it becomes so interesting. For instance, when you look at the Forex market, Nigeria wants Forex rates to appreciate so that they can buy US dollar at a cheaper rate. However, for exporters and speculators, they will love that there is further depreciation so that they can book Forex gains in their dealings. When you hear one man's meat is another man's poison. Now, while Naira also depreciates and creates hardship for household and business revenue from CIT and BAS soared by nearly 60% in the year 2023. We also have about $9.5 billion increase as against 12.93 billion using the year-end official Forex rates. Interest rate is already increasing further to bring about the much needed inflation rates. So the bottom line, as highlighted here, is that investors will want higher yield on government instruments, but they will also complain that the debt service is rising. So all of these are jigsaw that we will have to battle with and find delicate balance. Like someone said, the best of it all is when the common man can assess that the adverse effects on his daily spending is is minimal or absolutely reduced. But we want to note that as we have some of these jigsaw panning out, it means that monetary and fiscal policies are changing. And it also means that opportunities and challenges are created, like I've highlighted. So for some, it will be an opportunity. For some, it will be a challenge to deal with. The summary is that suppliers of funds will require optimum return on their investments, cost of fund, correlating with principal invested. But users of fund will also want low cost. And this is what we expect will drive the demand for credit rating. Because one of the things we expect that where the rate is generally high, those who want to use money for productions, those who need money for investment, infrastructure, importation of machineries, expansion of factory, and so on, will require funds, but they will need it at a minimal cost that the market can offer, capital market. So either way, the need for credit rating to be able to assess the market will become a need for them. So given that, we will now have an array of people asking for credit rating. Integrity will become a challenge. And that's the cruise of the matter. Because you will not be able to get credit rating from a credit rating agency where your capacity for repayment, one of the things to be assessed is your capacity for repayment. And in trying to do that, your integrity is also a key issue because a credit rating will not be issued without information coming from the entity to be rated. And the general assumption is that information provided will be a true reflection of the operation of the company under consideration. So what is credit rating generically? It is an assessment of credit quality. When we say credit quality, we mean what is your capacity to be able to repay your debts as and when due. In trying to assess that, we want to check into your documents. We want to check into your audited reports. We want to check into your operation. However, while we are doing this, it is not like we are conducting an audit. So credit rating is not an audit. We have auditors who already, we have expectation that they would have checked into your records, your financial records, and they will ascertain that your record is a true and fair reflection of your operation. A credit rating is also expected to be a complement. It's not a substitute in investment decision making. What do we mean by that? Credit rating is just one of the things you need. On your own, you are expected to also make your own findings. You're also supposed to do your own due diligence before you put money in any investment, or before you invest in the instrument issued by a rated entity. So rating agency is just one of your references. It is not there as absolute. But we are aware that a lot of people, even though we keep saying this all the time, it appears that they have the mindset that the moment an entity or an instrument is rated, they do not have any other responsibility on their part before they go in checking any other things. So rating is also based on current information. It is assigned to specific instrument and entity, and it is based on quantitative and qualitative data. Quantitative data could be the account, audited financials of the organization, its management report, its production volume, and so on. But there are also qualitative issues like governance, like integrity, experience, market share, and so on. So it relies heavily on integrity of data. It makes that assumption that for you to have come forward and submit yourself to a rating agency, you are coming as you are, without any form of embellishments. But you will agree with me that when we talk about integrity, for some company, for some organization, it is like searching for a needle in the haystack. And that is where the real issue of our conversation lies. Like I said earlier, rating relies on both quantitative information and qualitative information. Most of the qualitative information is expected from the public space, from the public domain. At least for the purpose of due diligence, it can also be used to complement information already supplied by this entity to organizations like the credit rating agencies. So when we talk about solicited rating is the rating that you applied for as a company. You submit yourself to the process. So it's driven by information supplied by the company that is seeking for that rating. And most rating that you have out there are solicited rating. They are solicited. So the quantitative and qualitative information could be complemented by information that we have in the public space that is supplied by the media. So the media role as the fourth estate, we expect that it should not be limited to advocacy relating to governance. We also expect that this role should be extended to our business lives and that it should have positive impact on our business life. And this is where investigative journalism comes in. It can drive timely change in rating decision that can save our financial markets. Okay, so it can provide timely information that can save our financial markets. For instance, if I say a company is single A, I would have concluded that, okay, this particular company has adequate capacity for timely payment of its debts. But how about if they have integrity issues, which is not known, but through the efforts of a journalist, through the efforts of the media, you are able to, have information in that space that borders on integrity, that borders on the operation of the company, and you are able to bring it to the public. Then as a rating agency, I can get such information and confront the organization and ask them to speak to what has been reported, to justify why a rating action should not be taken against them. By so doing, even though we've not, see ourselves, talk to ourselves, we have been able to rescue a situation. We have been able to rescue a situation. So this is where it is very important. So when there are rating change decisions, the media serve as channel of revealing information about market players, market operators. Conventional wisdom also suggests that rating agencies pay attention to media coverage as sources of additional information and firm-specific market, sentiments. So we are able to tell what exactly is going behind the scene as a result of investigative efforts of the journalists or the media. Now, at this point, I would like to ask, I need just one or two people to confirm you can hear me well. Okay, Ekane, thank you.
We can hear you, sir.
All right, thank you. So in Kiruka, Please kindly pay attention to your own network. It could be your network. I actually asked that question because of you. Kindly pay attention to your network, not from our end here. So once assigned, a credit rating is subject to ongoing review. So for instance, the fact that I rated an entity A or double A does not mean that that is the final rating. That rating consistently, as a rating agency, I still hold the right to change that rating at any point in time. If there is credible information out there or available to me that suggests that that company is not deserving of the rating that has been assigned, I can review the information in the public space again, check through what I have done, and call the company to come and let us have conversation around it. And if it cannot be defended, then it affects the rating. And the public is made to know again that, look, this company is no longer deserving rating that has been earlier assigned. And the public is aware of that. And with that, we will be able to put bad eggs within our business life in check. That is one very good role that media can play in all of this. So credit rating may be suspended. It may be withdrawn outrightly because of changes in the completeness, availability, and reliability of information provided to secure the rating in the first place. Given that negative media are more influential than positive news, the focus for us,
Okay, should I write? Is this on?
Olusola Bello. Olusola Bello, if you can hear me, kindly, unless you leave it open in error. Okay, so we focus more on adverse media. We want to see what's wrong. What's wrong with the system? What's wrong with the company? What has the board members done wrongly? What's the conduct of the company? Do they have integrity issues? And so on. We follow up with such, information. So specific rating change decisions could be any of these. It could be revised. It could be withdrawn. It could be revised. If we revise a rating, it means that you are AAA before, then we can downgrade you to AA. Or you are AA before, we can downgrade you to single A. Or you are even A before, we can upgrade the rating to AA. So that's a revised rating. You can revise downward, you can revise upward. It can also be withdrawn. When we feel that we thought we have information about you, but now it's occurred that the information about you is no information. So your rating can be withdrawn, technically meaning you have no rating or you have not been rated. So it can also be suspended. Perhaps there is an issue we are tracking about you. Maybe your board has just been suspended and so on. So we can also suspend the rating, pending when the coast is clear about what actually went wrong about you. And we have seen in the past case studies as to where rating actions has been taken by a rating agency. We've had published by Prussia, Skybank rating suspended due to lack of sufficient information. It is not just here. We've also had in the case of S&P withdrawing Twitter's credit rating. And the reason is for lack of sufficient information. So if you have information, if you lack information that can sustain the rating, your rating will be withdrawn. If it appears that the information you provided negates what is happening in the public domain and you cannot justify the differential, then your rating can also be withdrawn. And so what is the media role? What are we expecting? We expect objectivity in reporting. We expect that you are objective because whatsoever is the reports that you have given may come back to hurt the company. And sometimes it can even go back to hurt the investors. Can go back to hurt investors. Maybe your rating is suspended, you are a public company. The moment they heard that, oh, your rating has been suspended, withdrawn, or you are downgraded, investors can dump your shares and your share price will crash. And create liquidity crisis for the company. So that's why, because of high level of involvement from the investment space, we expect that media role in reporting issues relating to organizations' objectives. One in this sector, I am number 2 in this sector, and so on. Market research coming from good people like you can confirm such assertion and can debunk such assertion. Independence, because you are also independent, as much as possible, credit rating agency want to rely on information validated by third party. The reason why we use auditors' report, the reason why we rely on audited accounts. So we also see you as independent persons who can provide independent opinion on the qualitative side of the organizations that with the operators and players within the business community. Surveillance, business analysis, reasons behind the figures, expose, and investigative journalism are some of the things that media can, put forward to enhance the job of opinion providers like us. Because what you do right or wrongly goes a lot of way to, influence what we do a lot of time. So it is on this note that we want to conclude that given all that we have said, the media plays a big role in revealing the truths about the market operators and players through your access to information You can promote a vibrant market and economy. You can save the day when there are issues. And credit rating as opinion giver about the credit health of an entity can also benefit from collaborative efforts that we can have together. And this is fundamental to correct functioning of our capital markets and the right allocation of resources again market. So it is on this note that we want to thank you.
Please put your hands together for Miss Hilda.
Sincerely, Farouk Umar, I think there is a noise coming from your end. Thank you. So it's on this note that we want to thank you sincerely. Like I said, I'm going to keep it very short, and I think I live up to my promise. Like I said earlier, I've always believed you don't talk too much when you are talking to people who ask questions for a living. So I think it is better for us to interact more. And that is why we are going to leave our time for questions and answer session. So if you have any question, you can unmute and speak, or you can drop your question in the chat box area. So once again, let me thank you for your time. Okay, Ekanem, please go ahead.
Good morning, sir.
Good morning.
Mine is
Executive Director and Chief Operating Officer, DataPro Limited.
thank you very much.
Thank you. Do we have any other question? All right, I guess.
Good morning, sir.
Oh, good morning, Abiola.
Yeah, good morning. Yeah, I would like to know, because when you were talking, you said that credit rating does not mean that we should use it as a basis for our write-up, or it's a backup. Is to understand that, okay, if you are writing a report or you are doing any investigation, you need to understand that businesses, your rating can help whoever that is coming into that sector, or whoever that is writing or getting into that business to understand that, okay, you can do this way, you can do it that way. I want to know.
I'm sorry, Abiola.
Yes,
I can barely pick what you are saying. I think you have some noise in the background.
Oh, sorry. Can you hear me now, sir?
Yes, if you raise your voice a little, it will be okay for me.
Okay, sir. What I'm saying is, can you hear me right now, sir? Is it okay?
Very well, very well.
Oh, good. What I'm saying is that when you were talking, you talk about credit rating does not mean that the business or what somebody wanted to go into is healthy, whatever another, but it's a means of giving information that you can go into this business. This business is good, or you can do this, or you can do that. give the prospective business owner an edge in terms of putting his or her money into that business. Will that help in our write-up?
All right. Okay. What I said is this, that credit rating is an opinion to repay its debts. Now, that opinion is meant for the company asking for it, and that's why it's called solicited rating. That opinion is also meant for the public, the investing public, and the regulator, because sometimes regulators also demand for rating. But what I've said is that for the investing public, if they choose to invest in a company, credit rating is one of the reference, not the absolute reference. So it's not just, so it does not necessarily mean that the rating does not speak to the credit capacity of the organization. However, reference. So it's like you want to permit me to use in a religious setting, you want to use the Holy Book, but in addition to the Holy Book, you also have references in literature written by other people, and you are pulling everything together to be able to, marshal your points. So that is what we are saying, that to an investor, credit rating is just one of the reference. So you as a media person, if you also want to write about the company, of course, in addition to other sources of information about that company, that rating opinion is also a reference material as well. Whether you just want to use it to write, or you want to use it as an avenue, as one of the means of making investment decisions. So it's a reference material, and a good reference at that too. I hope I answer your question.
Sir, thank you so much, sir. I really appreciate that, sir.
All right, good. Do we have any other question?
I have a question in the chat box, sir.
Okay, please read it. Okay, I've seen it. In case of solicited rating, will the rating agency still exercise its independence in rating the company in question? Don't you think that such opinion could be influenced? Thank you very much, Nkirika. The first you need to note is that rating agencies are regulated. Rating agencies are regulated. So in-house, we have our checks in place to be able to ensure that opinions are not influenced. And to be able to also go specific, number one, governance structure process is that those who will negotiate fee for the rating are different from the rating analysts. So rating analysts don't get involved in commercials. They don't get involved in marketing. They don't get involved in engagements, in solicitation. If they are present during the meeting where pre-engagement meeting is held, an analyst is only there to understand why you want the rating, not because you want to discuss the fee. So rating analysts are not permitted to discuss fee. So that's one governance. Then number two is that no single individual within a rating agency determines the rating of the organization. So it goes through phases. The analyst that is attached to the rating is reporting to the chief analyst. The chief analyst, after his own review, is reporting to a rating committee that is more than 1 or 2 persons. And the rating committee are people that have considerable experience in the industry where that entity operates. And they can use best judgment to also review what the rating analyst has done, what the chief rating officer has done before you get to the rating committee. It is at the rating committee that your rating becomes final. So you see with this, rating agencies have in-house, measures to guide against being influenced by the entity that is soliciting for rating. And also, they are also regulated. So from time to time, the regulator in that space also check to ensure that those governance, those issues are properly put in place. Nkiruka, I hope I answer your question now. Nkiruka, if you hear me, you can just type yes, or you can mute to confirm that you heard what I said. Oh, okay, good. Thank you very much. So, kindly confirm if there are more questions in the chat box.
Well, thank you, Dele. There are no questions. I would just implore every participant to please drop the media house they represent in the chat box, and also their email so that this slide can be sent to them. Please go ahead and do that now. Just type your name, the house you represent, as well as your email. Thank you so much. So we'll just give like 5 minutes for us to be able to capture that. Thank you.
All right, thank you. While you are doing that, we'd like to let you know that in line with the footprint that we shared earlier, DataPro is into a number of things, and one of them is our API verification services, where we help organizations to mitigate risk by conducting validity checks. We also do background checks on employees. We are into debt recovery. We do staff background check. We have advanced scoring report for corporate, and we have rating as a service. We are involved in compliance projects. We conduct anti-money laundering training. We carry out independent compliance audits. We also handle digital address identity verification. We also, as an organization, we also compile PEP lists for the purpose of managing PEP risk by financial institutions and designated non-financial institutions. Like I said earlier, we are also a data protection compliance organization. So we advise clients on their data protection obligations. We also into rating as a service for credit giving organization to have a tool in their hand where they can determine the risk score of their potential borrowers. We have a training cutting across risk management, trade-based money laundering, as the case may be. So you can follow us on our social media, on Instagram, Twitter, LinkedIn, and Facebook for more information and to also get some valid materials that can enhance your reporting. And I do hope you will join us on that. So that's our contact. I would like you to constantly keep in touch. Like I said earlier on, this program will come up again next year, the last Thursday in the month of March. And we'd like you to block that in your calendar, so that when we come back to it, it will only be just to remind you that this training is coming up. And as always, it's a free engagement. You don't have to pay for it. So it is on this note that I want to thank every one of us for coming. And we do hope that you will join us again next year. Thank you very much.
Suddenly, can you hear me, sir?
Yeah, go ahead.
Have this question been answered from Mr. Alex?
Ehime. Okay. He says, sir, what or qualitative? Well, it is both. A rating agency can withdraw, be the driver. But what I can say is that if it is qualitative, in most cases, it borders on integrity. Maybe there is a debt the company is hiding from the glare of the auditor or from the full glare of the rating agency. And maybe the rating has been assigned that this debt was uncovered, whether by an audit report or by an examination or by a regulator, and it was brought to fore. And so the rating could be affected by that. So sometimes it's on qualitative issue that borders on integrity and governance. But other times it could also be on quantitative issue. But if it is in the public domain, then you can be sure it is more of qualitative. Amen. I hope I answer your question. I hope Amen is still here. So that is the response, Amen, if you are listening. So Victoria, I think that's about the question.
Yes, sir.
All right. So thank you.
Okay, thank you, Dele. Before we go, thank you everyone for being part of this. I know Dele must have mentioned during the presentation about our webinar that we usually do every second Thursday in October every year. All right, so just be craving your cooperation when the time comes in terms of putting the program out there, and there's going to be a kind of a media talk before the webinar. So you'll be hearing from us, and also as well, we might be also be needing your cooperation in terms of putting some of our ratings out there. So you'll be hearing from us from time to time, and I will appreciate your cooperation in that regard. Thanks for being part of this, and enjoy the rest of your day. Bye. And happy Easter, everyone.